Hey, Kevin here, top 100 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. I want to discuss, I have to discuss what is going on with GameStop and why so many brand new investors are jumping into it and why the stock had been soaring for the last few weeks. I mean, it is an incredible story of what happened with GameStop, but it's also a pretty shady story that I want to summarize for you and tell you. So first off, GameStop is the video game retailer that had been struggling for years. If you are a gamer yourself, or you have a kid who loves to play video games, you've probably heard about the complaints. They buy a brand new game, they trade it in, and GameStop gives them like very, very little trade-in value for it. But it used to be, especially when I was growing up, the place to go for brand new video games, trading your stuff, buy used games. It was the spot in the early and late 2000s. That has changed. The pandemic has changed that a bit, but also games are becoming more digital now. So I don't need to walk into a GameStop and trade in a game or buy a game. I can just download it. And in a similar way that AMC is in some ways becoming obsolete because now you have brand new movies going straight to HBO Max, straight to a Netflix, or straight to a Disney Plus. Why do I want to go to the theater except for the heck of going? Like why would I want to do that? So GameStop is in a very similar place. So it had been falling off for years, for years, and Wall Street was making money on the stock falling. This is called short selling. So I want to lay out everything so you can get exactly what's going on here. So basically, what short selling means is that you are borrowing the shares from other investors, other people, and you are selling at what you think is a good price. And as the stock falls, you buy it for cheaper and give those shares back to the people you bought it from. So, for example, if I think that, I'm just making up a name, I think that Apple is at $100. I think Apple is bad. I think it's terrible. I think it's going to fall. So, what I'm going to do is borrow people's shares and sell them at 100, which is where Apple is now. And then Apple starts to fall off. Apple goes all the way down to, making up a price here, Apple goes all the way down to $1 per share. Guess what? I buy up everything at $1 a share, and I give all the shares back to the people I borrowed it from. So I've made basically $99 for every share that I borrowed. That's how it works. Basically, you as a short seller, you're betting on the stock going down. And if a stock is consistently down, like GameStop had been, you have been making money over and over and over and over again. There were times last year in 2020 where GameStop was down 17% for the month, 28% for the month. So you're making that difference because I sold it when it was higher. I bought it for cheaper and said, hey, look, you had 100 shares. Here's your 100 shares back. It ain't worth much, but you let me borrow it. I did. And it just continued to fall. So that's how short selling basically works. I do not recommend that beginners short sell. So that's what had been happening for GameStop. It was continuously going down. It wasn't a good company until January. That's when things changed. There is a Reddit thread called Wall Street Bets, and it's gotten real popular over the last 10 or 15 days. And it's a dangerous thread, to be honest with you. It's a bunch of people hiding behind screen names that are saying like, I believe in GameStop. I think it's going to do this. And basically this entire group of people have been buying up GameStop like crazy. And I'm going to pull up a chart just so you can see how crazy it was. At one point, I want to show you exactly what we're talking about. So you should be able to see the screen now. So early at the beginning of this year, January 7th, GameStop was about $18 a share, which is still high, right? Going back to August, it was $4 a share. It really not a great company, right? People started to hear about it. People started to buy it up a little bit. And then right here on January 7th, it was 18, almost $19 a share. That's when people started to talk about it on Wall Street Bets, and it exploded. It went as high as $39 on the 14th of January. It got as high right now as $78. It was even higher. Earlier today, it got as high as $158 a share before dropping down to 80. And that's ridiculous, right? So what this is called is a short squeeze, which means the people that were short selling, they borrowed the shares and they're waiting on it to fall down and buy it for cheaper and give those shares back. Well, if things don't go in your direction, and I borrowed these shares and sold it at 100, but now the price is going to 200, then now I have to buy, right? I need to come back and buy it now, because if it keeps going up, I'm going to keep losing more and more and more money, which is what you don't want to do, which is why short selling is dangerous. There were some, I think it was Citron Research or so. I think that was the name of the company. They short sold, and because of this event, they've lost $1 billion. I think it's like 1.6 billion to be exact. They've lost a lot of money by short selling, and a lot of these Wall Street gurus have been losing money because of this maneuver. And this happens when a stock doesn't go in the direction that you expect it to go. People knew, and in theory, and really in reality, GameStop should be falling off the map. It should be bankrupt here in the next 3 or 4 years. That's just the way, logically it would work. But sometimes you get groups of people, sometimes like Hertz. Hertz was not a company that should have gone up. Neither was Kodak, right? But a very similar maneuver happened here, where people just got together and say, look, there are enough of us. Let's push this stock up. Let's make some money. And then eventually it continues to fall off. Now, I do very, very much think that GameStop is going to fall off in the next, I don't know if it's going to be a few days or a few weeks, but this is unsustainable. There's no way that a stock goes from $5 a share all the way to 158 and just continues being normal. That's not how the market works. It seems like it's something that's very, very short term, very, very dangerous for new investors, because you may not know when and if to get in and how to get out safely, as opposed to people who have gotten burned. In this thread, Wall Street Bets, there's one person in Bloomberg that invested $53,000, which is a lot of money to be putting into one sketchy, risky investment, but walked out with 11 million. There are other people who walked in with 30, 40,000 and walked out with zero and lost money because of how this whole thing started. The reason why I'm not a big fan of new investors jumping into this high risk scenario is because you could have gotten in at 158 and it could have dropped right down to 78, almost $80, which is where it is now, and you've already lost a good chunk of your money, and we have no idea, absolutely no idea, what's going to happen tomorrow or the next few days and weeks. So it's a very, very dangerous strategy. Is one reason why I don't do penny stocks. This was a penny stock over the last few months. It was a penny stock kind of back in August. It's not a company that on paper is doing well. Neither is AMC. AMC could be a target for this. BlackBerry, you remember that company is still out there. BlackBerry, it has been targeted and has been a stock that people are talking about on that thread. I just joined the thread today just to really see how weird things were. So this stuff does happen. In this case, at least according to CNBC, it's not illegal, but it is a very, very high risk strategy. It's a high risk tactic where people, you just buy just because everybody else is buying and hope that you are in there quick enough and you're able to get out quick enough. So very dangerous thing to do, but that is what's going on with GameStop. I suspect, based on what I've seen on that thread, that's what could be happening to BlackBerry here pretty soon. You can throw AMC there if you want. I didn't see so many AMC posts, but AMC was up pretty big too. And it's another company that there's no real reason as to why AMC should be soaring 20 some odd percent. I want to just double check and see how high AMC was. So GameStop right now is up 18%, which is ridiculous in a single day. If you go all the way back to, and let me share this real quick as we're looking at it, that way we can all see the same stuff. Give me a second. I don't know why I'm fumbling around with sharing the screen today. It's usually like a menu that pops up, but menu's not working today. All right, so here we go. So if you go here and you look in the left-hand corner, you'll see that from August, so 6 months ago, or July, I guess, you can see that it's up 1,800% in 6 months. That is not normal. That is not normal. Let's go to, what did I say, AMC. And let's see if this wants to work for us. There we go. So GameStop up at 18% today. AMC, have that low for us. AMC is not doing the same, but AMC is up, as you see here. AMC is up 25% in a day. Now, AMC is at a really strange ride, and it's still under $5. Again, we'll see if they do the same maneuver here. but these are the things that tend to happen. So AMC up 25% today. Let's look at BlackBerry and see what they are right now. But I mean, look at that. That's ridiculous. BlackBerry up 28% today, going back the past 6 months. See if it's gonna let me put it more than 200%. Yeah, about 201% over the last 6 months. And you can see here, nobody was thinking about BlackBerry. It really wasn't worth much, five or so dollars. And then all of a sudden, since what, the 13th or so, right around the same time as AMC and the others just popped and just blew up out of nowhere. Primarily, not it's not all on this thread, but basically on that particular thread. So it's a dangerous thing to do if you are looking into those stocks, but it's also why I tell people you really don't want to jump into penny stocks because yes, you hope that things would happen like this for you. You can add $10,000, $1,000, and then just boom, you're out, you're a millionaire. That would be great if you could have known that in advance. There are some that think, well, I'm gonna jump into AMC or I'm gonna join this thread and just do what they do and end up fine. Before you do that, again, there are also a lot of risks because you do not know these people. You don't know what time they got in. You don't know if they're experts or not. You have no idea who these people are. The other side of it, there's actually an article of a guy who invested $1,000 and did exactly what each of the posts said. He started with $1,000. Within 3 moves, he had $9 left over. That was it. He started off, I think he lost $800 the first time. Then he did something else they told him to do. He made 300 so odd dollars, did one more move, and then lost pretty much everything and ended up with $9 and was like, look, okay, this clearly does not work. So you want to be very careful when you're following the advice of people you don't know, people who may not have credentials, people who may not even have experience, and they're just there to play around. Could be a joke to them. Some people are making money, others aren't. It's just a real sketchy situation, which is why I just say you need to focus on all the things that make a good company, because it's not the only way to make money is by investing in high risk investments. You could just have sat back and over the last year or so got you Apple, made you 250%. You could have sat back and did something a little more risky like a Tesla and made you 600% for the entire year. You could have done something, and I'm pulling stuff out, just throwing stuff out there. Almost anything from the yearbook. Square was up 250% last year. PayPal was up 150%. I could have done that and just relaxed and really made a lot of money without really having to, oh my God, let me check this thread. Let me hope that these people are accurate. Let me put in enough money and then get out and really be stressed. To emphasize this even more, I did inside of one of these apps. I think it was, which app was it? Because I got too many investing apps. So I went in onto the Ameritrade to test it out to see how dangerous this is. So I'm a professional. Y'all be careful. So trading the option on it, within 5 minutes, I was up $100. I'm like, oh great. I think it's $115 to be exact. Within the first 5 minutes, I started at 9:30. By 9:35, I had made $115. I only invested 500. It's a small amount. It was play money. I knew exactly what I was doing. I was ready to lose that money because it was a crazy time to be in the market. So I did that, made 115, and I'm texting my friend. I'm like, hey, look, we really need to cover this on the podcast, the Flavor podcast. We actually talked about GameStop twice now because it's been so crazy. Like, look, found out about this thing on CNBC, learning more about it. This is crazy, right? By 9:45, I was down. I went from $115 that I had made to down like $20 to $25 like that within, was that 10 minutes, from 9:35 to 9:45. By about 10:15 or so, I was back up by $89. So I was getting closer to that $100 mark. I was like, all right, look, this experiment is over. I'm done with this. I do understand what's going on, and I see why it's as crazy as it is. And I see why new investors can get burned so badly. The other huge mistake people are making too is that they borrow money to go invest in crazy stuff like this, which is really, really terrible, because if it doesn't go the way you want it to, you could owe a whole lot of money to somebody else. I mean, like the bank or TD Ameritrade or whoever approved that margin loan. This is one reason why people are very skeptical of Robinhood because they just let anybody get these loans, and it's far too easy. So if you are somebody that does not come to videos like this and discuss things in a way that actually makes sense, then you could have borrowed $10,000 from Robinhood, invested in something like I'm losing the name in Gamestop when it was at the top. You heard about it. So, oh my God, let me buy it at $158 and it drops to 80. And now you've lost a lot of money. And now you have to owe the money that you just borrowed, and it's more than you could have afforded. And now you're in real deep trouble. That happens to millions of people every single year because they're investing in stuff they don't understand. And they're investing in things trying to chase gains. You're trying to follow and just get what everybody else has gotten without really understanding the business and if things are moving in a natural order. Every time something happens like this, and it quote goes to the moon, whereas you saw it wasn't like a straight glide up, right? It just went oof, like straight up, and a lot of times they come right back down. And we saw this so many times last year, Kodak being one of them, Hertz being another, where people try to push the market and make something out of nothing, a company that you know for a fact is not going to do anything, or be like a solid company. We don't even know if GameStop is going to be here in 2 or 3 years. The company says, and they did get a new board and a new I don't know if it was new CEO. They got a new board. They say they're going to be profitable by 2023 if you make it that far, right? All right, so just wanted to let y'all know why so many people, if you're on Facebook and you start to see it come across, it's because primarily of a Reddit stream called Wall Street Bets and what is called a short squeeze, when people are borrowing to sell a stock at a certain price to buy it back at a much lower price and give those shares back to the people they borrowed from. They make money from that difference. Well, now that the stock is not going in their favor, if you were borrowing and hoping that it fell, you bought the stock or you borrowed the stock at 14, hoping it was going to fall to $5, and now it's 158 or now it's 80, you are in big trouble. And you've got to buy it now so you can at least prevent it from going to 158 or whatever. This is why people are losing billions of dollars by doing this. All right, so that was a little longer than I would have wanted to, but I wanted to explain it. Let me know if you have any other questions in the chat. Let me know, because it's the first time I've ever explained the short squeeze. I know it can be new and a little confusing to some people, but let me know in the comments. Share this video. Please hit the like button, because I don't want you to get burned. Yes, there are people who have made money. Sometimes a dead clock is right twice a day. I'll also throw that out there, but it is a very dangerous way to make money. You want to make money that way, fine. But I'm just letting you know, if you have no experience, if you have not done this before, you haven't been an expert and been around the block, you're risking a lot by hopping on to trends like this. All right, that's it for me. I'll talk to you guys later. Bye.